Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value Finance. I've got Scott with me, So and Reap Capital. He's got a whole new fresh background. He's obviously smiling from ear to ear. I mean, look, you can see his Twitter and his YouTube. We don't even have to talk about it anymore, but we're talking about it. So welcome back, Scott. Love to have you on the channel. Love your insights.
Indeed.
Pretty awesome. So what's your favorite sector right now? And is this pullback done? Because that's what everybody wants to know is they think a recession's coming. They think it's done. It's over with. What sectors are you watching? What are your favorite and why?
All right, so let's start off with, are we done? I haven't really looked actually at all the charts today yet, but let's just start off with IXIC, which is the NASDAQ composite that I've been talking about, I think a couple of times now. So if I just put it back to the weekly time frame and then just turn on the 200 weekly moving average, we are there. We are finally there. So we've talked about how it's going to come, well, it's likely to come down to the 200 weekly moving average. So we've got the start of rate hike, knee jerk, we came down, quantitative tightening, knee jerk, we came down, COVID, knee jerk, we came down, and now it started the rate hike. We came down to 200 moving average now. So this, I've been saying, is the likely bounce zone. So I think we'll see a bounce. It might not be this week, it might be next week, just like, so what typically happens, if you see these charts, you've got the big red wicks, and then you start off with the green candle. So what that really means is, typically over the weekend, for example, investors have time to digest and the dust settles over the weekend and they regroup and fresh capital tends to come in the following week, which is why you see these type of patterns where you've got big red week followed by a big green week. Big red week followed by a big green week. So hopefully next week we'll see a big bounce. That's kind of what I'm thinking might happen. And if I just zoom out a little bit more, and this is what's interesting because everyone's calling for a crash. And I shared this earlier on my channel. But if you go see it, CNN Fear and Greed Index, I think yesterday when we shared, it was like somewhere around here. I forget the exact number, but now we're like down here. The fear is so great. I don't even know if we went down to these levels during the COVID crash. I don't know. I don't think we did. So yeah, the fear is really, really great in the marketplace. And all I'm seeing is,
which is good to buy though. When it's extreme fear, like that's the time you want to do a little bit of Sprinkle Fest 2022. Yes. Obviously, my financial opinion, not advice there, but
yes.
You want to do exact opposite of everyone else. So when everyone's like really worried, you're just like, all right, I'm going in, throw on the mask, you just go for it. That's my take.
Yeah. That's my thinking as well. And so I know everyone talks about, the potential crash in NASDAQ or whatever it might be, but I don't know if I see that, to be honest. Like we don't have, the drivers for it. So we're not seeing the typical, okay, so here's another way to measure how overstretched we are. So let's just turn back off the log chart and I'll just go through what I'm seeing here. So during the 2000 crash, and this is what I mean when I say the bubbles can tend to go for a lot longer than people expect. Because are we there in terms of the NASDAQ bubble? Because I really do believe that there's a tech bubble. Don't get me wrong. I'm not bullish on the sector. But what I'm saying is it can go a lot higher than people ever imagined possible. So here, all I'm doing is a measured move, right? So what is the downside? So how far we stretched above the 200 weekly moving average in NASDAQ during the dot-com bubble? From here down to the 200 weekly moving average, we were 58.99% away to the downside. From, to come down just to the weekly moving average, we had to come down 60%. Okay, so I'll make a comparison because what I'm seeing in terms of pattern, just purely pattern, not fundamentals or anything like that, what I'm seeing is a much more similarity in terms of pattern to this period here, where the measured move from the top here to the 200 weekly moving average was 35%. Right? Let's go back to today and see where we're at. because are we that stretched? Are we, 60% stretched from the 200 weekly moving average? So I'll just take it from here down to here. We're 33% away from the weekly moving average, which means the market hasn't had that huge parabolic run like we've seen during the tech bubble, dot-com bubble, the 2000s. So all I'm trying to say here is, I'm not trying to predict the NASDAQ, where it's going to go next. I surely believe that it is well in the bubble territory, but all I'm saying is it doesn't look stretched when you compare it to history. And I can show you a couple of measures which indicates the same as well. So if I go IXIC divided by Fred, corporate profits, what you will see is, in terms of valuation compared to corporate profits, we're not there yet. Does that mean we're going to absolutely get there? No, it doesn't, right? Because we could have a bubble, it could burst right now, right? But all I'm saying is the valuations can stretch even further from this point onwards.
I've seen that pattern before, where you come up and then it comes back over, and then you get a huge decline, like a massive one.
Yeah, you could.
Look at I'm just looking at the pattern itself, not on the tip there, but the entirety of that pattern. If you look at Bitcoin has that same pattern. It just looks, it's just raised up. And I know that's a ratio, but and this, So if you just kind of zoom into the right-hand side and go on a time frame that's maybe like daily candlesticks.
Weekly.
Yeah, weekly or daily or something. I do daily. So the like that one looks like it wants to head lower too, but you always get that U shape. So you get the left-hand side that's got the zigzags. Then you get the U shape. It comes up. Uranium had the same pattern too. Now that I notice it, and then it comes on down, and then that's continuing to go lower because I think that's highly tied with interest rates. It's inverse correlated to interest rates, just like the NASDAQ is. Yep. So that's what I've always kind of noticed. Now, does interest rates impact uranium in a negative way? I think it does in the beginning, and then I think it has to separate. It's almost like it's trading like a NASDAQ stock.
So yeah, I mean, this is what I'm seeing, right? So I expected this temporary bounce, like an interim, like a bear market rally or something like that, if we're in a bear market. So that's what I'm seeing. I think it's stretched. What I also talked about is IWM. I haven't really checked this one. Okay, so we bounced right off the support zone yesterday. I haven't looked at it until now, but that was a line that I drew in, and it's bounced right off support. What I did see actually is this gap as well. So we might fill this gap. Where's the box? Yeah. All right. So I see this gap right here. I'm sure you see it too, Andy.
Yeah, I see it.
Yep. So you could fill this gap, but I think we're close to the bounce zone. At least a temporary relief rally is what I'm kind of feeling. So that's what I'm seeing in the general markets right now.
Here's a question for you. What do you more heavily weight? Do you more heavily weight the fundamentals or the perceived fundamentals that you see, or the technical analysis of the charts?
It just depends on what you're talking about. So, like in terms of like trying to time this market. So the reason why I'm not in any of the general equities right now is because I don't believe in the fundamentals. So the technical setup can look great, but if the fundamentals aren't great, then I'm not going to be in it. But that's not to say that I don't look at it, because I think I do look at it, because it can be liquidity. It could be related to liquidity in the system. So a temporary downturn in the general equities market can also impact our shares. So that's probably when I look at it. I look for bounce zones like this to see where we might end our downtrend in our commodities place. So yeah, that's the extent to which I look at it.
What about uranium? So let's say uranium in the short term to medium term, right now, let's say we break through uptrend the bottom uptrend lines, and let's say we break through it, is that a game changer for you?
No, it's not. I don't think so. Because we've talked about it on the last show, where there were many fake outs and shakeouts along the way. So I give you we talked about an example of Rio Tinto, right? For example, right? So this was the massive commodities boom, and this was the bear trap right here. So if you look at this chart going across, there were two bear traps. So there were two instances where we put in, on a weekly time frame, we put in a lower low and lower high. So here you can say this is the low, and then we went down, we broke below, and then we had the slingshot pattern. This is what I mean about B bottoms, is when you have a false breakdown, and when you shake out a lot of the buyers or the retail investors, it just does a slingshot upwards.
Yeah, so the cheetah slingshot is what I call it.
Yeah, so for me, with the commodities play, like, I mean, every dip is a buying opportunity, right? Because the fundamentals are there, the tailwinds are there. I mean, temporarily it can go down with the general markets, but because the fundamentals are so strong and we're in a big uptrend, like in all commodities right now, no, I don't think it worries me. Like, I just have to hold on to the thesis and just go with the flow. So this is very possible. So
when you say fundamentals, what do you mean by fundamentals? Like what exactly are you looking at or watching outside of the Finding Value YouTube channel?
So yeah, we've talked quite extensively about the supply demand picture, right? So for me, it's all about money flow. It's about liquidity in the system. It's about money flow in the system. So we've got bonds, equity, general equities that are very highly overvalued right now. So money needs to come out of those sectors. So it could mean that, okay, in case of, the NASDAQ, for example, it could mean we just go flat, or it could mean we come down, or it could mean that the rate of incline is slowing down. It could be all of those things, right? Or any of those things. So what I'm seeing is, I just look at the money flow, which is, okay, we've got general equities, which is very highly overvalued, especially the tech sector. We've got bonds, which is very highly valued right now, just because of, we talked about the 50-year cycle. So we've just been going up in bond prices over the last 40 years or something like that, since they've started, bringing down the interest rate from 1980. So we've got that. We've got the mining cycles that are lining up in terms of the supply and demand picks for commodities specifically. We haven't had so many miners go bankrupt, right? Not that I know of anyway. So many miners have gone bankrupt. So I think back in taking uranium, for example, I think we had 300 miners or something like that back in 2007. Now we're dwindling down to 50 or something. So we've had significant bankruptcies. They're not in production. We've got huge supply deficit everywhere across all commodities. We've talked about this: aluminium, graphite, oil, gas, name it, right? So everything is in supply deficit. So you've got all the fundamentals that are lining up. So once again, to summarize, it's the liquidity in the system. Money's coming out of general equities and bonds, and they need to find a place to go. And it's going to be commodities because it's the undervalued sector. And on top of that, you've got the fundamentals, supply deficit fundamentals that are lining up for commodities. So that's the tailwind that I see for commodities over the next 10 years. Yes, there's going to be deflationary impulses along the way. I don't think we're in one now. Like, I think we will see one in about 2 years' time, or 2 to 5 years' time. I think this is more like a very small bump along the way. So if people are having difficulties coping with this downturn, this slight downturn, I mean, wait until you see the huge deflationary pressure, like we've seen back in in the middle of the 1970s and 2008. That's the proper deflationary pressure, where I think if you go back to the 2008 timeframe, I think a lot of gold and silver miners, while gold only fell, I think 30% during that decline in 2008, the great financial crisis. I think gold miners, most of them fell like 70, 80, 90%. So wait for that to happen. But I don't think we're there. I don't think we're there.
So, I mean, obviously you just described the fundamentals behind the commodity bull market and whatnot. Is there anything in technical analysis, charting wise, that would change your position on the commodity sector? What would you have to see that would contradict or counteract your fundamental bullish picture?
Okay. Yeah,
is there anything that would shake it?
I'll be using the ratios, I think. So let's go back to CCJ divided by Dow Jones, which is, which tells us is the money flowing out of the general equities into uranium stocks, for example, right? Like, I mean, that still looks beautiful, right? There's nothing wrong with this chart. So I guess for me to absolutely throw this out, like, you would just need to come way down and like just stay down.
Mm-hmm.
I don't know.
What I'm trying to get at is a lot of people use technical analysis. They watch a lot of things on YouTube. They watch a lot of people do technical analysis in front of them, and they say, "Hey, look, this is broken an uptrend." And then the question then is the thesis or the commodity bull market or whatever, is that broken? My answer is no, it's not. But we may have a larger pullback in the short term. That's my take. So then the question would be, what do you need to monitor when you're a new investor to ensure that the bull market is still on? So that's really what a new investor, like what should they look at? And to me, it's all ratio driven. It's ratios, inventories, and then looking at the housing market, because that's the driver of the liquidity into the system, which is inflation. But like, what do you look at? Like, what keeps you in check if you have a broken uptrend line? And you're looking at something like some sort of data, whatever you look at. It's like, what do you look at to ensure the commodities trend is still in place? And maybe it's this ratio that you find comfort in.
Yes. So for uranium, I think CCJ probably provides the best view, just because it hasn't really been diluted, and in terms of charts, like, you can go back the longest, because U.UN, for example, hasn't been around for that long. So that's why I typically like to use so U.UN only dates back to 2005, which is what I mean. Ideally, if this is obviously the spot price of uranium, so ideally, if I could use that, I would probably use this against Dow Jones or something like that to see where we're at. So let's just try and do this. Yeah, there's nothing wrong with this chart, right?
Yeah, it looks like it has
I could almost just
declining. Well, there's a declining trend line that's broken, but there's also the it could be a falling wedge almost on the left-hand side.
You mean here?
Yeah, it looks like you have almost a falling wedge. The whole thing. No, not that one.
Whole thing?
The big boy. And I'm not saying
but here's the thing. So here's the log chart, and we've just broken out of perfect looking downtrend line. Right. So I mean,
you could do that.
There's nothing wrong with this chart. So once again, if I turn this log off, what I see is a good bottoming pattern. And then we broke out of this key resistance. We've come up, we're just back, coming down to retest the area. So that's all I see. I mean, for me to see rotation, I need to see, exactly what you said. So the reason why I look at CCJ versus Dow Jones so much is because it's telling me this is a clear picture of whether money is rotating into commodities or out of commodities relative to other sectors. But look at anything, right? If you go U-Sol divided by DJI, look at that. It's just, the run's just starting.
Right.
So we could have a pullback. We could, let's theoretically say we have a pullback in this, which is not an impossibility.
You can see it on the look in the year 2001 and 2.
Yep, like this.
Yeah.
Yep. And look, so if we come down here, and let's say we come down to this level here, and we start going up again, that's just forming a nice technical pattern there as well, which is inverse head and shoulder.
Mm-hmm.
So we could do something like this. And we've talked about the possibility of this because obviously with U-Soil, for example, you're still putting in a very strong higher low, even if you come down to these levels, right? Which on this chart, so the trend is not broken in any chart right now. So I'll look at the CCJ chart again, Chemico Corporation.
The thing that I do is if you have a low ratio and it's cheap,
yep,
you know for a fact you're buying this on a relatively cheap basis compared to history. Like that is a fact that nobody can deny.
That's a fact.
Now,
yes,
the problem that a lot of people get into when they're new investors and even maybe a little bit seasoned, not pro, but like a little bit more seasoned investors is no one in this world knows the path that it's going to take. We don't know this path that this stock is going to scribe out. But what we're trying to do is gain evidence across a whole bunch of different things to make a case of investing in a certain sector or in a certain stock.
Yes.
Your case comes from valuations being cheap and ratios. Your case comes from historical outperformance given certain market conditions. So if you can tie all that together, basically what you're doing is you're putting the highest probability of chance in your success over time because you've got a cheap asset in a good market condition. And that's about all you can guarantee as a fact. You can't guarantee the path because it can get pushed, pulled, grabbed, manipulated, maybe manipulated. I don't know. It can be whatever in the short term, but they cannot manipulate it forever. The markets can't hold this down forever. So your greatest asset as an individual investor is time and not leveraging up. Just it's time in the market, get in when it's cheap and ride the thing as long as the market conditions and generators are generating the positive condition for you. I don't think there's anything else that necessarily anyone can really do. And if someone is searching tirelessly, they're looking at it all the time, searching for an answer on the short term of why something moved, why did it do this? You're not going to ever find that answer. No. That's what I found. You'll never find the short term movement answer. They'll say, why did it do X? No one's going to know that. You're not going to know. And maybe they have someone's attributed it to it. Like, it's the bank sold. It's like, they just made that up, guys. No one actually knows the for sure answer. When you read the news, they're just making that up. Unless it's like they
fit a story to the price movement.
Yeah. They're trying to correlate stuff, and it just doesn't work that way.
It doesn't work.
You buy it when it's cheap. You buy it when the trend's good, the market conditions are good. You just ride the thing. You're going to be riding through 40% pullbacks and 50% pullbacks, and that's just normal. I mean, I don't. You're going to have to get used to that. And especially in commodities. Commodities are really volatile. They're the most volatile of anything. But that's how you gain 20 baggers in very short periods of time. That's the only way you can do it.
Yes, so that's 100% right. So I remember this book that I read ages ago. So I don't even remember which book it was. So it was a story about this guy, a trader, like a seasoned trader who joined the trading firm. And he said, so this is a pattern that it's going to follow. It's going to come down to this level. It's going to be range bound. And then once it breaks out to the upside, it's going to go, right? And then apparently the managing director of the firm said, are you sure about that? And he goes, apparently the seasoned trader who just joined the firm says, it's very likely that it will happen, sir. So apparently on that spot, right at that moment, the managing director called up another trading desk and said, sell, whatever, like sell like bunch of soybeans. I think it was they were talking about sell a bunch of soybeans and make it break below that support level. And so he did it on the spot. And he said, that's what happens if you try to predict the short-term movements, because you don't know what next trader is going to do to the market, right? So there could be any one big trader that comes into the market and creates this huge movement. And so you just can't predict that. Like, how do you predict that? And which is why I said last time when we did an interview, it's like the waves, right? Trying to predict daily movements is like trying to predict where that one sprinkle of water is going to go next. Compared to when you look at the bigger picture, as you said, like if you zoom out to the monthly time frame or the weekly time frame, if you're just looking for those major higher lows and higher highs, then you're looking at the tide coming in, right? So you can look at the tide news or whatever, like the information around tides when the tides are coming in based on the moon movements. That's pretty accurate. So that's what we're trying to predict. We're not trying to predict, where the interim bottom is going to be or the interim peak is going to be. We're trying to just ride the thing with the tide. That's all we need to try and do. And if you focus on that, like, there's no reason for anyone to be stressing about this. Like, just switch off, let the tide come in, let your boat lift up with the tide, and just be happy with that, I think.
How do you ride through this? Like, you've got this volatility, or you've got the pullback that we've got recently.
Yeah.
And I know a lot of people, they are very fearful. I don't know necessarily why. I've been through this quite a bit. Maybe they haven't. Yeah. I don't know. How do you get through this? What do you focus on? What do you look at? What do you keep telling yourself as you ride through volatility or these large pullbacks? Like, how do you make it through it?
I don't know. They just seem like, I think you've just got to be open to all possibilities, and you can do that by studying history. So the reason why I'm not surprised by any of these movements is because I've seen this story play out before. Like, so there are multiple scenarios at all times, right? It could have a large pullback, like we've seen right now in CCJ, but you've got to be open to more pullbacks just based on history. But that doesn't change the narrative, right? So I'll just share my screen with you again. So you have to be going back to history and look at what happened in history. So, you've mentioned this, Andy. So you've mentioned the possibility of what if we are kind of here.
Yeah, that's where I think
like
we're
a 50.
At, but, yep.
Yeah. What if we are like 50%? Yeah.
But what I based that off of was the time frame away from the downtrend break and where we are in the expansionary phase of real estate. That's why I think we're early. That's what I'm basing it off of.
Which means if you're right, then we're going to be in for an even bigger bull run than we've imagined, right? So what this is showing me, so you could do, you've always got to just look for multiple, I guess, scenarios that can play out. So this could now be just one big upward movement, and now we can see like a downside here and put in a major higher low, and then we can start going up. So that's a possibility. So this is the low, this is the first low. This can be the higher low. And then everyone's like, okay, how it's broken down on some of the uranium charts. Let's just look at uranium. They're like, oh, it's broken down, right? Well, maybe, but maybe not, because what we can easily be doing is let me just delete everything off. So we could just be going, okay, this was the first higher high. This is the first low, higher low. And then we could just be doing this. Easy,
a major
right?
move. Yes. Like a huge third leg.
And yes, that's right. And so when you look at these charts, and when I'm seeing these pullbacks, like, yeah, it might be painful for some people that are holding on to this, but this is what you've got to see. Like, this means the move, this is like, we haven't even started the move. Well, so if you started going parabolic here, it means we're towards the end of the bull market. Whereas if we go down a little bit further, let's say another 20 to 30% on CCJ. I'm just drawing random stuff here. So we've talked about, okay, so now like what I'm seeing here, and you've talked about this, Andy, is how about if this is like an inverse head and shoulder pattern?
Yes. Yep.
You've talked about this, right?
Yep.
We've talked about it on your show. So how about if this is an inverse head and shoulder pattern and we come down to 17? Well, that would pretty much match. That's another 16% downside. That would probably match. Yeah, the downside risk that we saw back in 2002, right? So 46%, 47%, that would match up. Then then you know that maybe we're closer to here than here. That means we've got 3 big legs coming up potentially.
Yes.
So it's even better for us long term.
Yeah. Yes. And the reason I think that is based off of where we are in relationship to real estate, but also the NASDAQ bubble. Because I think what it's going to do, it's creating this gigantic fractal. Yep. The last fractal, if you look, was very small. You broke the downtrend. You have this small fat fractal. It pulls back. And then the preceding move going forward is a fractal of the first move. So that whole move is tied together. What it has just happened recently is a massive fractal was made where
this is going to be massive.
And remember, I'm speculating on this, obviously, because the pattern hasn't played out yet. But if you look at the time it took from that downward movement in days, and you look at the time and days to where we moved, they're very similar. Very, very similar in size.
We are. So it really depends on where you draw the lines. But this, let's say this is a breakout of the downtrend here. That's 608 days. And let's say you can't really draw exactly where it broke out. Let's say this fat green bar here is the breakout. It's 577 days. So it's very similar. It could be anything. Yeah.
It doesn't have to be perfect. But I'm just saying the days away is similar. And I'm not saying it has to be exactly the same. And if that is a fractal, if that's that first move, then it blows everything out of the water, because and we could still pull back even more. But what that's saying is that the first leg was so gigantic that people, they're not looking grandiose enough. What they're doing is they're looking like everything's right in front of them. They're saying, oh my God, this was the entire bull market. It's completely done. It's over with. What I'm saying is, what if this is the first leg of something massive that is coming? Now, to think about it, and you think about uranium, what is coming ahead of us? What are the conditions that we're investing in right now? And could uranium go through the largest bull market it's ever experienced ever? That's the question you should ask, in my opinion. And what do you think? We've got a oil crisis, a natural gas crisis, and a coal crisis. What do you think uranium's going to go through if you have emissionless baseload power that everybody wants to use? Well, you'd see your first fractal be just massive if a huge bull market was coming. So the way that I always view it is maybe we're way earlier than what everyone else thinks. We're going to get a bear trap at some point here. And this is the trap. This is what it feels like. And in order to maximize your returns on this, and remember, I always say this, I don't hold long enough. I am now, because I've gained that wisdom over all the years and the experience. And I know what's at stake here is when that thing pulls on back, that is basically your last best opportunity to buy. I mean, that's really what it is. And that is saying that the thesis is right, that everything's good. Now, if we broke the downtrend on that last run there, how far back did that go? I saw the percentage wise, but we pulled back to that. The last one had an inverted head and shoulders. Somewhat, if you look. And I think we're creating an inverted head and shoulder as well on the right-hand side. The neckline is the top of the market, very close to the top of the market of the last bull market. That's the neckline. And what that means. This is
what we're looking at. This is crazy.
Yes, it's going to be a gigantic potential pattern. And your neckline is where the top of the market was, basically last market almost. And when that reverses going the other way up, which we're coming from almost zero, you're going to see a massive move to the upside. So I'm hoping that's what it is, because it aligns very well with the expansionary phase of real estate and liquidity coming into the system. That's where I'm looking like grandiose, like this huge big picture view. And I know people are looking at it, they're all right here. They're seeing every little movement, and every 30, 40% drop is killing them. Oh, I can't live through this. I'm like, can you live through 100 bagger? I mean, what if that comes? What if 100 baggers start coming? This is like the last best opportunity when this bottoms and starts turning around that you can get. Like, this is what it feels like. This is what it looks like. This is what it smells like. And this is what everyone's going to tell you. You know what they're going to tell you? You shouldn't buy because it's going down. That's what they're going to say. They're going to say, don't buy it. It's going down. We have a recession coming. We have a crash coming. Well, what happened in 2000, in 2001, and 2002? Same thing. The same thing happened.
That's right.
And I'm not trying to convince anyone to buy this. What I'm trying to do is, like, this is what it feels like. When I bought at the bottom of 2020, everyone and their mom was telling me oil would never go back up. And now it's over $100. Everyone told me that was easy. Oh, it's easy to be in here. You bought it at the bottom. I'm like, I bought it right when I was doing this. Everyone was telling me it was the worst thing to purchase. And I'm like, screw them, I'm buying it. So, I mean, you almost have to be wired differently than everyone else. And my problem is I panic buy. I'm always early on my buys. I will say that I'm always early on my buys. Why? Because I don't want to miss the move. That's just me. I always enter early. Like it'll be coming down, it'll start slowing down. I enter and then it falls a little bit more on me. It always happens like that to me. And then I cost average in. I get the cheapest shares. I do cost average in, but I always buy it a little bit too early. And that's just the way I am. I understand that. And I'm gonna have to live through the bottoming process. And sometimes I'm not too early. Sometimes I'm not too early. But most of the time I'm early because I get excited. I panic buy.
Yeah, that's right.
So that's a 800% move almost.
Yeah, and that's an 800% move just from the top here. So, and this is what I've talked about also on my channel is that, like, I mean, there's no need to panic because your risk to reward is like so great here, right?
So that's let's say going to happen.
Yeah, we could.
Do you know how to do a Fibonacci extension?
Not the way that you do it, but I just use this.
Okay, try doing this. Delete that one out. Go to.
Go. Do you want to do it on your screen?
Yeah. I can do it on mine.
But here's what I keep coming back to, right? Because in a commodity bull market, like you've said before, Andy, on your show, like we're not going for 100% gain. We're going for like 30 baggers. We're going for like 50 baggers. We're going for 100 baggers. So the thing is, yes, my downside risk is like 50, 60, 70%. Who knows, right? Granted, I know that. I'm going into the commodities market expecting a huge downturn throughout the way, right? But what I'm looking for, my risk to reward, let's say my downside risk is 50% and my upside, reward is like 3,000%. That is 50 to 3,000% risk to reward. Like you just got to focus on the big picture.
Another thing we'll talk about after I hit this up real quick.
Yep.
I've got another thing I want to go over real quick with everybody is, so this is CTJ. I've still got some of these. I have 792 days. What I did was I went from the breakout here all the way to almost where I think it might end. 791 days is like January or June, sometime in June. And this one, it ended in 792 days was the bottom of the bottom. So it kind of like slowed down and then it did that slingshot where it brings you all the way down and then slingshots higher for a nice, good slingshot move higher. And then everybody's going to say, oh, well, it was easy for you to buy down here and hold. And because you're up so much. I'm like, it's not easy, guys. You had to buy when everyone's telling you that you've got this crash and slingshot. But here's another thing that I want to kind of show everyone is I'm going to back out and I'm going to see this big move here. What if this move is a fractal of the move that's coming? Does that make sense? This is the first wave. The third wave is this one. And I don't know. I'm just kind of throwing this in here. So what you want to do is you come down here, you come all the way back down, and you can see that we're hitting the fractals of like a half right here. Look, we come up, we hit a half, we pull back, and we're going to come probably back to this 0.236 level at about $18, $19. It's not going to be exact, and you might only dip and hit it and touch it. It may not be staying there for very long, or we bounce off of it like this they did here. This is a highly probable level of hitting. And we come back here and then we move, and I'm going to show you the potential move. I'm going to have to squeeze this up so much. So I'm going to back out. This is your one. So a 1-to-1 move, it's going to be more than that, I think. Now, some of these moves, they go all the way up. I think that $96 is a high probability for a one leg, like a multiple leg move. Leg up. Yep, for a third leg. Then, $200 is also a highly probable move. And if this thing is on fire, maybe you get to 238, 250 on the next leg, not the whole bull market, the next leg of the move. And I know this is all scrunched up because it's such a big, ridiculous move that could potentially be coming. But that's the possibility. And I'm not saying that that's necessarily going to happen. Another thing that I want to talk about too, and a lot of people don't realize this, is Be selective on the sectors that you choose. The sectors are not all equal. And what do I mean by the sectors are not all equal? Some of these things are cash cows. Some of them are highly speculative and they don't have any cash. Position yourself in a way where you've got value in it. And that value will carry you. It'll carry you forward. So what has value? Things that have infrastructure in place that can generate cash. Energy service companies, the oil production companies, they are generating cash right now. Energy services isn't. The money hasn't flown there yet. I am speculating that the money will flow there and they will be gigantic cash cows. The infrastructure is in place. Now, some of these uranium companies are far more speculative. And that's why I have a good sized position, because the possibility of the move is gigantic in uranium. I have to be there because of the previous bull market, how everything went up in that bull market, how the risk reward is put, and also how large this potential bull market could be. That's why I'm in uranium. But it carries far more risk in terms of it not producing cash, not having the infrastructure in place, not having all those things. So when I look at sectors myself, I go, what's the high risk reward bet? And what is the highest probability? The highest probabilities to me with the lowest risk rewards are ones that are already generating cash flow. So shipping is something that may be more resilient in a downturn, and it may have very good upside. The probability of it working, I think, is pretty good as well. So you've got oil that I thought was a really good bet. I piled into oil quite heavily, and natural gas. I didn't do coal. It was mainly natural gas and oil. I really like natural gas. That's the one I really piled into. You notice my biggest holdings are all natural gas. They've got at least 50%. CDEV, SM Energy, Crew Energy. I mean, there's a whole bunch that I'll have a bunch of natural gas in. And I wanted exposure to natural gas and oil if I could have gotten it. So those are the ones that I overweighted. And it was on purpose. I thought the probability, the infrastructure, the cash flows were all going to be massive coming up. Now, uranium, it's going to be different. It's going to be a harder sell. But when and if, not an if, when this goes, you could see ridiculous things. And this isn't about putting in and plopping all your money in one little company. It's not like I need to guess the company. Let me guess this company and put it all there. What I'm doing is I'm spreading it out amongst the highest probability bets. What, like Baseload, Elevate. I have a little bit in all these smaller ones in Canada. I don't know which one's going to hit the big one, but I want exposure to all of it because all I need is one to hit. If one hits and it's a massive one, that's all I need. I can spread it out. I got 10 grand, put 1,000 in each and let one of them hit. And if you get there's a possibility that it gets multiple hundred baggers depending on what it hits. Now, am I saying that it's for surely in the bag? No, I'm not. That's why I don't put a lot of money in it. I just spread it out and ride it. So hit with your big money, you got to hit the high probability. It's the probability that you want to put your money in, the high probability. The low probability but high potential are the ones that you spread your money up. That's portfolio position sizing. That's making sure your portfolio's got the good risk reward and you're not dumping in all these like really small gold and silver exploration or uranium exploration and putting all your money into it, and then trying to live through this volatility. You're probably going to just go crazy and sell out, which you don't want to do. So if you position size correctly, you can kind of get your nerves calmed down a little bit. And some of the larger ones don't have that volatility if you can't ride the volatility. So I've positioned the portfolio, and you've heard me say this before, diversified mining just to capture the commodity bull market. They're paying dividends. I can have a lot of money there. The royalty companies, Wheaton Precious Metals, like those types of bigger ones. Why do I own those? Because I know they'll capture the move. That's not a bet where they have to get something right to capture the move. If a small exploration company hits nothing, what do you have? Nothing in a big bull market. What happens if you have 50 to 100 income streams coming in, paying you continually, and the price goes up 4x on what you're selling? Well, you just killed it. You're killing it then. And you're capturing it. And if one of those streams goes away, no big deal. I don't care. Still going. So when you look at this, you have to capture them. In my opinion, I have to capture the move. I have to capture that move. I don't care if I don't have the total outright return of some random individual who guessed that they got the right exploration company, they got the right amount in it, and they just got lucky. And unless you've got geologists that know which ones to buy already, and they're like sitting there showing you this, they're like, look, we got this, go ahead and buy it before we release this. Which a lot of those billionaires, they have insider information, so you got to be careful on that. So I mean, I know I kind of went off in a little bit of a thing there, but just make sure that you're well exposed to cash cows. I call it cash cows. The cash cows, like oil and natural gas, is my cash cow. The energy service sector will be cash cows, I think. And then you've got the shipping that we've identified. We've got other sectors that are out there that are cash cows. The ones that you want to speculate on, watch how much you put towards them. And I speculate on a lot of stuff. I spread my money out a bunch of whole different things. Why? Because I already have all my money in this stuff that's going to be going. I am knowingly risking a lot of money spread out amongst a whole bunch of little guys to try to swing for the fence. The problem is, I think a lot of people see that and they just want to put all their money in my speculative stuff, and then they don't have any of the cash cows. So be careful how you structure the portfolio. I can't tell you what to do because I'm not licensed to do that. And I know people look at my portfolio. The way that I would position is get the cash cows, get exposure to some of them, get some of the bigger companies. You don't have to go all small cap. You don't have to push the leverage to the ultimate. Maybe some of these ones that are paying you 20% dividends, maybe you put a big fat chunk in those, and then you take the dividends and put the dividends in the small caps and keep buying them as they're going berserk all over the place. But yeah, do you have anything to add, Scott? I mean, I know I kind of
agree with that 100%. So my portfolio, like you know my portfolio, well, how it's structured. So my portfolio base is like precious metals, physical precious metals. That's 30% of my portfolio. 1/3 of my portfolio is physical precious metals that can't go to zero. And on top of that, I've got, with the gold miners, it's mainly cash cows. Like all my gold miners are cash cows. They're reeling in cash, trading at pretty reasonable valuations in terms of price to earnings ratio or price to sales ratio. And they are cash cows. So that's my base. That's like 40% of my portfolio. On top of that, I've got cash cows in terms of oil companies as well, and iron ore companies, which are trading at like some ridiculous valuations, like 3 times PE ratio. So that's like 50% of my portfolio, right? And then you've got uranium. I've got 30% uranium. That's my home run portfolio. That's like my potential life changer. But that's not just, I'm not just buying uranium without setting up my strong foundations, which can protect me long term, right? So even within the uranium portfolio, exactly what you said is correct, because you've got to have strong fundamentals in uranium. You'll see the good names with good, strong fundamentals taking less of a hit right now. And what I mean by that is those with cash in their books, cash in their hand. Like, I mean, I didn't go in and buy Bannerman until they announced the recent raise. And the reason for that is I don't know what's going to happen. I don't know how long this bull market is going to take to play out. You know, I can try and make a guess, but I don't know exactly. It could take longer. So what the last thing I want the mining companies to do is to try and raise cash when we're in a downturn like this, because you're going to get diluted. So what I look for in my uranium companies, if they're not producing, is I want them to have a lot of cash as a buffer. And I don't care if that means less of an upside when uranium performs well, because obviously, you know, with lots of cash, you know, when you know, your market capitalization might blow out disproportionately to the uranium prices. But that also means I've got the safety of, you know, riding through it without risk of significant dilution for the next 2-3 years. So, you know, look for companies with high cash positions and just position yourselves. And shipping company, you know, I love my shipping company since you, Andy, you introduced me to shipping. And the reason for that is exactly that. They've just started turning around in terms of their net profits and, you know, cash flow. Now they net positive cash flow, and they are reeling in cash. So they're piling up cash literally. So, you know, with my holdings, I think people just need to understand that obviously my handle is uranium, but I have lots of other positions out there which are very foundational to my portfolio. Cash cows, you know, they're reeling in cash. I've got physical metal that can't go to zero. I've got shipping companies that are reeling in cash as well. So, yeah, you just need to remember that, you know, you have to diversify and you have to manage your risks.
I will also say this too. If we get this pullback and it pulls on back here, we get to see this kind of rounding bottom or a bottom that we can somewhat identify. I will be adding to some home run hits. Why? Because when we get these pullbacks, some of them are going crazy to the downside. And that's when I hit the full risk button, the full send, I hit it with the lowest risk opportunity. And I hit some up. I mean, I'm down on some positions that I thought, oh, we're hitting a bottom here. I added a little bit. And some of my ads were absolutely horrible. They were horrible. And I mean, obviously when looking back, but guess what? I can't predict the short term. I mean, I bought LEU up at $28, $29, $30, something like that. And then it just beeline straight lower. I'm like, well, my uranium enrichment play outside of Russia, which is like the only thing out there, that just blew up to the downside. So I have to now make a decision. The decision is, do I buy more? Do I sell it and take the loss? Now, here's some things that you can do if you're a new investor and you don't realize this. You can take losses right now. You can sell out of one stock, buy another stock, and take the loss and put it on your thing. And you can claim up to $3,000 of losses per year. So what you're doing is you're not necessarily taking the loss in respect to your portfolio. What you're going to do is you could say, I don't really like this company as much as I thought. I'll sell this and buy another one, take the loss on that one, and I like this company more. You can do that. And you can take that loss and yeah, it's okay. You can leave, Scott. And you can take that loss and claim it on your taxes. That is an option, but you can't buy the stock within 30 days in America. Otherwise, it will be a wash sale and you can't take that loss. So that is something that you can do if you have some losses and you want to take the losses and use them as a tax write-off or you know, $3,000. You can write off about $3,000. Well, it's $3,000. But if you have gains in the future, it can also offset those gains if you wanted to sell something. So keep that in mind. That is just one thing that you can do. It doesn't mean that I'm recommending it. I'm just saying you can do that. So if you have something where you're like, you know, I don't really like this stock, but I like this one a lot more, you can take that loss, put it over here, and you can get the gain, and then you can take the loss and use it for tax purposes. So that's kind of how I view everything here. And I think we're still in a bull market. You always hear me say that the market conditions are good. What am I looking at for the market conditions? Real estate, just to remind everybody, real estate, I look at the interest rates, and then I look at the ratios to show me how everything is working. And the CRB index is still doing incredibly well. The CRB index to S&P 500, I'll just show you real quick. This is one of the main things that I look at is the CRB to S&P 500. And look, it's continuing to move higher. Even in the face of everything, it's continuing to outperform the S&P 500. So the trend is intact. And even if this pulls back like it did here, it doesn't mean that it's out of trend. You just have to wait and be patient. Now, this has a long runway ahead of it. So that long runway is telling us that the valuations are still incredibly cheap. And all we have to do is be patient, ultra patient here, guys. Be relaxed. Try to raise capital. If you're working or whatever, save it up and deploy it to where you think that it's best fit for your portfolio. The rotation is happening. It's happening right in front of our eyes. And we're just getting caught in I think, kind of a deleveraging in the stock market. Everybody's selling everything across the board, raising money for probably margin calls. I don't know for sure, but that's my guess. And it's just bringing everything down. So,
which is what happened in the CCJ bear trap, right? When CCJ declined 50% or whatever, that's exactly what was happening in Dow Jones, at least. I mean, NASDAQ was falling well before, but Dow Jones only started falling when that CCJ had that little blip downside to the downside. So, yeah.
I am hoping that this is the bear trap. Why? Because then that means something huge is coming. I'm hoping. And the way that everyone's feeling right now, the majority of people, I mean, I can feel a little bit, but I don't know, maybe it's just beat out of me a little bit. But the way that most people feel, this is what a bear trap is, and people capitulate. They sell. And I'm seeing people in the comment section, I sold everything. I'm out. I'm selling this. I'm selling that. Twitter, sell this, sell that. It's like, guys, I'll take your shares. Fine. I'll sit here and take them. And I'm seeing this through. I'm seeing this through the end. This is like the movie Shooter. He's like, something about more people are gonna die, but I'm gonna see this through to the end, or something like that is what he says. And I'm like, well, that's me in this bull market. Like, people are gonna be selling left and right, and I'm gonna see this through to the end, because I think that the market conditions are still undeniably, I said undeniably, insanely good. And what I mean by that is deficits, energy crisis, all that's undeniable. You can't say that we're not in an energy crisis. I mean, just look everywhere. I mean, look at gas prices, look at all that stuff. And I'm using short-term things, but I don't see it getting better. I don't see the supply coming on. I don't see any of that things in the future where it's going to be fixed. I don't see people running to energy service companies, buying all their services in copious amounts yet. The money hasn't even flown over there yet. So we are like, this is like a baby bull market that just started. It's a little baby that's still crawling, and we're about to start running at some point. But that's when the bull market's a little bit older.
It's like when you're on a massive road trip with your family, for example, right? And you've got this wonderful destination that you need to get into and get to, and then you see roadworks right in front of your house, and you turn around and go back home, and you cancel your holiday, you cancel your vacation, you cancel everything, and just ruin your day. So.
Yep. It was some construction that was only 1 mile long right outside your house.
Yeah.
Nope, I got you around.
Just gotta zoom out. Like, I mean, this is gonna like buck off so many people, right? Like, that's why it's called a bull. That's why it's called the bull market. Because it's just gonna buck off so many people. And people are just gonna buck out. And as soon, I bet you that people that get bucked out right now won't be able to re-enter the market.
Nope.
Because they once it starts ripping again, like at what point do they get back in? Like, that's the biggest thing.
Yeah. That's what happened to me. This is what happened
to me too. Yeah.
It was coming down, and I was trading in and out. I was doing all the cool stuff. And then all of a sudden, boom, it was like, oh my goodness, I'll wait for the next pullback. Boom, 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 gone. And I'm like, there's no pullbacks. And then now you don't know what to do. You could have bought it at $18 or whatever it was. Now it's at 50 and rolling higher. Like, I don't know what to do. Do I FOMO in? Then you don't know what to do. So timing this is like impossible, to some extent.
For me, it worked until it didn't. So what I mean by that was I saw this parallel channel. So when I was first trading, back in the 2000s, I saw these beautiful parallel channels that was just bouncing up and down the channel. And I was just like laughing, because I was like, this is so easy. I'm just buying at the bottom of the channel and, selling at the top of the channel and so on. And then one day it just broke out and just went boom, boom, boom. I was like, damn, I'm missing the whole bull.
Yeah, exactly.
So yeah, like, I mean, I can try to do the same thing, but who would have known, right? Because it could have easily just broken out this time around. Who knows, right? So
it could have.
I'm not gonna
look like it was.
It could have. Like, you just don't know. So the thing is, by doing that, you're risking a whole lot more than what you're risking a whole lot more versus what's to be gained. I'm just telling you from my experience is that I caught a lot of those moves. I can tell you, I was just trading like the range, like the whole time. I was like, oh my goodness, this is so easy. I'm just buying every time it comes down to the channel. And then one day it just went boom. And I was taking like maybe 30-50% profits along the way, like many of those. And then one day it just went. And that it was just going up and up and up and up, And I shared with you the other day, like one of the ones that I sold out at like 50% profit or something like that. It went 50x, so 5,000 times, like a year after I sold it. So I don't know,
but like it's just, how did that make you feel?
It made me like puke.
Well, I saw Ultra Petroleum take off, and I didn't have like any money in it. And I'm looking at this going like, oh crap, I got to get in. Oh crap. So I did get in, and I didn't make much money. I hardly made like anything compared to if I just sat there and did absolutely nothing. And I looked back and I was like, I'm such a retard. I'm so stupid. I just kept going through that. I'm like, I have to learn from this. I will never do this again. And and now I'm like, I will never do this again. I'm only going to buy when it comes down. I'm going to cost average in, and I'm going to hold this whole dang time. I don't care. Like, that is my strategy. It's like, that is it, done. There's no arguing. There's no double guessing it. There's no anything. Now, the only thing I worry about is because people watch us or watch me or watch whatever, and I have a website or whatever, I am like deathly afraid that they're going to make the same mistakes as me. So that's my like biggest worry. Isn't even about the stocks, isn't even about my portfolio. It's about other people and making sure that they know what I know, because this only comes once. These big, huge bull markets and commodities, and they don't last very long. It's not like, oh, there's going to be an opportunity next time. Yeah, wait until it goes 200-300% in a month. It's like boom, and you're like, oh my, what the? And then it just keeps running, and you're like, that's all you do. You just go, do I buy now? Then I'm going to have a bunch of people ask me, Andy, should I buy into this stock that's already run 200 or 300%? And I'm not going to have an answer for you. I am not going to know what to tell you, because now you're taking on a far different risk reward profile. And I don't have that answer. But I mean, we've been buying the entire time that it's low. I know that. Even if you bought higher up, you're still bought it when it was low. But when we run and we start breaking through that other high, I don't know what to tell you, because I'm going to be stuck. I'm going to be like, and if all sectors are doing it at the same time, then you're really kind of out, because at least you could say, well, energy service is still down and shipping's still down. But if they all start to run at one point and you're out of all of it, I don't know. That's where I'm like,
my biggest fear is not being in the trade. Like, for me, like, these downturns don't mean anything, because I've seen it play out. And for me, like, when people complain about, oh, this short-term move, I told you, whatever, like, I'm just like, do you think I care? Like, my biggest fear is I don't care if there's like a 20% chance that it's just gonna rip tomorrow and go, because like, if I'm gonna miss out on this trade again, like I did back in 2000s, I don't know if I'll forgive myself.
You can't, because
I literally, like, early 20s or something like that, when I experienced the first commodity run, like where I sold out of that, share at 50% gain and saw it run up, rip 50x, right? And that's just an example. A lot of them, a lot of the stocks that I was in back then got delisted, so I can't go back to the price. But I know when I look back, after they all went through the blow up top, I know they ran 100 times or 20 times, 30 times. So literally, I could have been a millionaire in early 20s with, I think I started with a capital of like 20 grand, like at 18 or something. That was like all my life savings, started playing with it, made like 3-4x. And then I could have been a millionaire at a very early age. I'm just like, this is, I mean, I'm kind of thankful now, because I maybe I would have just been an arrogant bastard if I did become really rich then. But yeah, I mean, this is not an opportunity where I just go, I'm not going to be out of my positions. And I mean, I can not have a bearish view on this. Like, every chart that I'm going to show you is going to be bullish. Like, with all the commodities, I'm not going to post a bearish chart, because my biggest thing is all I'm doing is I'm buying, I'm holding, and I'm accumulating. And so only things that I'm looking for are accumulation zones. I'm not looking for any selling points yet. That will come much later. So any time I say, okay, this looks good, I'm just saying it looks good from a bullish perspective, long-term bull perspective. And when I say these are the key level of support, they are the zones that I will start accumulating more. So like, I cannot have a bearish view on this commodities run, because last thing I want is to lose my position and be out of trade, and that would be horrifying.
I will say this: if I don't catch this bull run, and I know this, if I don't catch this bull run, and even if I lose on it, at least I did everything I could. I looked at all of the things that I could potentially look at. Demographics, ratios. I did absolutely everything that I possibly could for this bull market. I did everything to prep for it, absolutely everything. So at least I'm going to see this through. But if I miss this, I won't see this until I'm a really old person.
Yep.
And this, I mean, I'll be like 70 years old, like ready, or, 60s or 70s, ready to keel away. Cause this isn't coming probably for another like 20 years and maybe even more, because remember, it's going to be whatever this takes for the bull market to end. Then it's going to be like another cycle. And then the top of that next cycle is going to be like 20 years. So that could be 20 to 30 years away.
Years, yeah.
I'll be 60 to 70 years old by the time the top of the next commodity bull market, maybe not, hits. So I bought at these really good spots, and I'm like, I'm in. I am done. Like, I'm holding and seeing this through so long that the ratios are good and the demographics are good and the real estate's good, all that stuff. Because if I don't see this through, I will be harder on myself than anything else. Yeah. I will not allow myself to not be in it, because I saw what happened. I saw Ultra Petroleum, guys. It's over. It's game over in natural gas. I saw that. It was ridiculous. I don't care. I saw that like day in, day out, just keep going up. And it was very similar to buying SM Energy at the beginning. It was just boom, 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 boom. You're like, oh my goodness, this is ridiculous. That's what it's going to feel like at the end of a very big move. If anyone rode the SM Energy train. So it's coming. We can see it in the CRB to S&P 500. We can see all this stuff. It's just, I will not sell too short. I will not sell early. I will not do that. I would rather ride up and over and ride it back down some than sell too early. Yeah, that's me.
Yeah, me too. Me too.
But if I'm sitting on a whole bunch of
right
gains,
now, like psychologically, if you sold a share at $1, I can tell you right now, if you see it at $2, you're not going to be able to buy.
I know it's hard to chase.
It's so hard. It's so hard psychologically to be selling at $1 and going back in at $2. It's, I can tell you. And I bet you most of these people who are waiting for this fall, like they're just gonna wait and go, okay, let's say you sold out at $1, you see it go down to 60 cents, or you're gonna be waiting for 50 cents, 40 cents. You know? That's what happened to me. Like, just psychologically, it's just like you want to catch the bottom again, right? And no one's smart enough to catch the exact bottom. So
I sprinkle. I just say, screw it, I'm in.
Just sprinkle.
There's times where I'm just like, I'll take it here. I'm putting money in. And it sometimes the technicals look good. Sometimes the technicals don't look that great. And I just said, I had to do it. I panic buy in. That's what I call it. I panic buy in. And then I just hold. I hold like no other. And SM Energy, before I bought that one, that's one that I saw the chart. Everything was really good. And I just saw it and I was like, this is it. Like, I just knew. I don't know what it is. And there's some of these companies I just know. Like, I look at them, I'm like, this thing looks pretty good. And you get into it, you hold it, and then let's say it goes against you. And it's like, oh man, what I did with SM is I bought more. It was crazy. Like, I was just like possessed. I was like, this is it. I know it's this one. So like, it bottomed at 150. I was like, boom, 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 like 6 days straight, just buying. And then I was waiting. It like popped up, and I think it dove down to like $1.42 or $3. I bought again. I'm like, nope, there's no way. This is a fake slingshot pattern. And I'll just show it real quick, just to show you guys what I'm talking about.
Are you seeing anything like that now, Andy? Because I think you told me the other day that you're like, this feels really similar to SM Energy.
There is one, yeah.
You need to obviously it's only you've got to be the platinum member, right? Yep.
Oh yeah. But I mean, I might share it. We'll see. So this one here, this is what I was looking at, and I was getting super excited because there's this downtrend line. I'll just kind of draw it in here. It's this. That's the line I was seeing right there. It was that one. So at $1.50, as it came down right in this general vicinity here, I was buying it all in these days right here. It was like, here, I'll even zoom in more. So this is the days right here. It was like $1.50 this day. Boom, 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 boom. It came up. I'm like, here we go. It came back to $1.40 something. Oh, $1.34 is what it came. $1.34, not $1.43. $1.34. It came all the way down to $1.34, and I said, I don't think so, buddy. This is the slingshot. I've seen this before. And look, this went lower than all of these other ones here. The only time it didn't go lower was right in this section here where we hit like $1. So it came back and I was like, BS, I'm buying you again. I got in at $1.43 is what my purchase price was right there. I bought it again as it came back up. I said, this is it. And then it came. Now, part luck, maybe. I mean, it probably is on my timing, but I knew this looked really good. And then look what came. It was just like ridiculous. I mean, how would you buy into this? What do you? I'm waiting for a pullback. Yeah, right. You're at $6.83 2 months in. Then you go to $10 at January 21. Then you keep riding higher. You're at $20 March 21. And then everyone's, oh, you should take your profit, Andy. You should take your profit. You're up all this much. You got a 12, 15 bag, whatever it is. And I'm like, I don't think so, buddy. I'm riding this. I sold too early. So I'm not selling this. Lots of sideways movement. Then you have that another big move up. Now we've got a little bit of a pullback going on, right? Andy, you should sell at $26. Now, I don't remember Chipotle and what I said about it. I sold too early, not selling it. Come on back down. Oh, you could have sold here and bought here at $15. Yeah, it looks great when you're looking back. You don't know how far this pullback is going to be.
You just can't do it.
You don't know how far back this pullback is going to be. You can't do that. Hold on to it. Oh, now I seem like a genius. Great decision. Still goes up. $42. Andy, you should sell. You should sell right there at $42. I don't think so, buddy. I don't think so. Yeah, now we're pulling back some. We're pulling back. Now, are we going to head lower or is this a bottom? I don't know. I can't tell you the exact timing of this short-term stuff. We can try our best to time it, but I can tell you, I wouldn't have guessed that this would have came back down, not with this big, huge green massive thing. And then they release strategic petroleum reserves. They're doing everything in their power to try to push this lower. This is all they could get out of it. Good luck. That's how I view this. I'm not going to sell my shares. Good luck with that. I'm going to go buy some more of something else that's down. But that's the way I view this.
So this chart, can you zoom out a little bit, Andy? I can see like how people would have panicked sold there. Like when it went from 20
right here,
that decline there. What's the measured move on that? That's a pretty big decline. You would have said, oh, we're putting a lower low here, right?
Move. Let's do, where is it? It's on this one here.
And this is what I mean by V bottom, because now we're setting up a stage for a V bottom, I think, in uranium.
45%.
Yeah, see? That's a tough hit to take. That's not an easy one to take.
Well, so here's another thing if you guys want to know. On one of my portfolios, I put like, I'll give you the dollar amount just to show you guys kind of what it feels like. And everyone says, oh, you bought when it was low. It's easier to do this, all right? So in my one portfolio, I put $5,700 into it at $1.50 was my cost basis. It was 3,800 shares is what I got. At that price, it was about $27. So I turned that into $102,600 from $5,000, whatever I had into it. So I had $102,000. That right there went from 102 down to, what was that, 1490 or so. Went down to $56,000.
Yep.
I lost, and this is what people will say. You lost 40 something, almost $40,000 on that there. And I said, I'm not selling it, guys. I'm riding it. Riding it. I don't care. So what was it? I had 3,800 shares. Now it's at what? 33.14, 125,000. Now I'm back up again. At the top, it was up over $40, 43 something. So that's one position that I'm just giving an example for. And people say that it's easier now that you're up. Was it easier to lose $40,000 on a $5,000 something position? Is that easier? I don't know, but I can tell you this, I'm not selling. There's no way I'm selling this because I know what oil has in store. I know they are screwed. They are screwed in oil. Like they don't have the oil. The OPEC does not have the spare capacity. They've done under investments. They are screwed. And that investment money is going to come back to energy service companies. I'm buying those. I'm going to get some shipping companies. I'm going to load up on that. Why? Because that's what's next. This is mid stride. This is a cheetah in mid stride. And the patterns still look good. I can't sell it. And I'm not going to hold too long. I'm going to hold until the market conditions change and the fundamentals change. So this could go down. This could even go all the way back to $26. It could go all the way back to this breakout. If it goes back to that breakout, I'm buying more. I will buy more. So I just want to make sure like people understand this. It's not easier holding this stuff. You just got to get the mindset like I'm riding this through to the end. That's my mindset at least.
Yep. That's mine.
So, anything else, Scott?
No, I think it's just because we've experienced this and we are so determined not to make the same mistake again. And I don't care like if some people get if I'm wrong short term, and if others are like calling us out for it, I'm just like, I don't really care. I just don't care. I'm holding on. This is a bull run that we're in.
Yeah, so I'm not going to make that same mistake again. I totally agree with you, Scott. I'm riding this through. I'm seeing this through, and I think we're right in the beginning of it. The demographic, everything, the way that all the data that I found on the markets, all my research is saying that we are in the beginning of this bull market, and we could see some really big volatility in the short term, and I'm prepared for it. But I'm ready to buy some more other companies as well. And I will say this to everyone. When everyone feels really scared, and you might feel scared yourself, that's the time that you really got to be on the hunt. You got to be on the hunt when everybody's going, blah, 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 don't buy this. I'm scared. It's going down. That's when you go on the hunt. You got to be patient. You wait for that. You look across. You say, okay, this stock is really good. Boom, nail it. This one's good. Boom, nail it. You got to be aggressive when everyone's, talking. Every 10, 20 cent down on a dollar something stock means multiples in the end. Means multiples. So does it matter if you're 10 cents away from your buy point? It might actually matter, because if it's a dollar stock and it's 10 cents lower and we're going to the stock to $50, you might be surprised what that multiple is. One's a 50 bagger and the other one, if it's $50 and you get it at 90 cents, is a 55 bagger. That's a big deal. It's a big deal. So cost averaging in when things are way down, getting a little bit of sprinkle on, that's what I do, sometimes is worth it. So when I see something down, I don't get afraid. I don't go, oh, I'm down in my position 20%. I'm like, I'm sprinkling. Give me the shares. I'll take them. I thought this was good then. I think it's a little bit better now. I'm going to take it. And I'm doing that in shipping companies. I'm literally putting in orders that are just blah, and they're filling. I'm like, all right, screw it. And they're not huge orders, but I'm getting them in there. And if I make more money, I'm going to put another order in. Boom, it hits it, tags it. It's like, I'll take it. Give me the shares. It's a game of share accumulation at the cheapest price you can get. It's not a game of I'm down 20%. I'm going to focus all my efforts on when I'm down. I'm focusing on how can I acquire assets at the cheapest price. And when everybody's puking their shares, I'll take some. If I can buy them. And we might not be at the bottom yet. I'm not telling everybody to go out there and buy all this stuff at this particular time. But if you see something that's a good deal and it feels right, and it's like on support, sometimes I just let it rip. But that's me. Again, not advice. And if you guys want to sign up to the channel too for the Platinum membership, we talk about this stuff in a lot of this, in a lot of these. And we've got a question and answer session coming this weekend. I'm going to talk about it there, on kind of some of the companies that I really like and why I like them. Some good buying opportunities that I'm personally buying myself. So that's all I've got. Scott, do you have anything else?
Yeah, just wanted to share verse from the Bible, as I normally do. So this is Matthew 19:26, and with God all things are possible. So rely on God, pray. That's what I do. Not in terms of the markets. I don't ask God to move the markets.
I was just thinking about the markets. I'm like, wait a minute.
I don't do that. I know it's coming. I mean, I know it's coming. So I take comfort in knowing that I know what's coming. So
this is what I want to happen. If everybody wants to know what I want to happen, I want these to pull back and I want them to stay down for a little bit so I can acquire more. That's what I really want to happen. I'm not afraid about my portfolio being down from its highs, and some of them got smacked pretty good. I'm probably good. I'm probably down at least 30%, maybe a little bit less than 30%, somewhere in that range. 25%, maybe about 25%. Yeah, it's probably about 25% down. But I'm on the prowl, man. I'm like, stay down here for a little bit. Let me accumulate some, because I'm really excited for some of these companies, and I'll let you know what they are. I'm the platinum member though. All right, guys, that's all I've got.
I just wanted to hold on. I just wanted to share this so that everyone knows exactly what I'm talking about. So this is the one that I bought at the bottom. I think I shared with you. And this, you know how Jesse Livermore says, there are people who can pick bottoms and tops that should give them the greatest rewards, but oftentimes they don't make big money, because they pull out too early. Well, this is exactly what he's talking about, because I bought this share like right at the bottom, like 11 cents. Back in 2009, I bought it at 11 cents. I sold it for like 15, 16. I literally sold it out here, because I was like, oh, what a quick 50% profit, 50% profit. I sold it out here, 50% profit. Look at what it did. That's what I mean. Like it's just, hold on. Let's go from 11 to, that's 12. That's 12 to up there. But if I just take it, that's a 50 bagger that I missed out on 4,981%. I mean, obviously I wouldn't have picked the exact top, but you get the point. So it's just, yeah.
Well, it all happened. It's a good thing it happened to us, because now I'm not going to do it again.
I know.
And I'd be more likely to sell on the way back down, even if I got like a 30 bagger out of it. I'd be fine.
Yeah. Yep.
Especially in that time frame. That was in like 1 year. So, all right, guys. Well, that's all I've got. Thanks for coming on, Scott. Really appreciate it. And hopefully you guys enjoyed the clip. Give me a thumb up. Subscribe to the channel. Subscribe to his channel. And you guys will get maybe a different paradigm or perspective than maybe some of these other channels who perhaps maybe have not lived through all of the ups and downs in the markets before. So thanks, guys. We'll catch you later.
All right.